Alright guys, welcome to the video. Anthony Special here with Special Analysis. Today, by request, we're going to dive into some of the order flow tools that I use. Now, I do have this projecting on two screens. I've kind of condensed, I would say, the majority of the primary stuff here that we're going to talk about in this video, just to discuss what is on the other screen, and I will shoot another video about that. We're looking at a very professional grade chart, measuring some of the things that the screen is doing, but on the bigger picture. I trade on what's considered a naked chart, meaning that there's essentially nothing there but price and volume. Okay, because I don't use any traditional indicators. I do have a reference screen that I do share with my clients that of course has, we're looking for momentum, we're looking for consistency, we're looking for potential areas as well. But when it comes to just the trading that I do on my own screen and the trading I recommend my clients to do on their own screen, it is raw. Okay, it is volume, it's price action, less is more. Okay, I do run volume profile, and when I say volume, it's volume profile, it's delta, it's cumulative delta as well. So that's what's on the other screen. But what's on this screen, which is my primary order flow, and I am in the process of actually setting up a new piece of hardware, which should hopefully be done by the end of the week, where all of the order flow screens will be on one vertical screen. This way it can all be seen with a little more clarity. So let me just kind of walk you through what I'm looking at here on this current screen, so you get kind of some input. This is by motive wave. Okay, this is my console. This is a footprint chart. Okay, this footprint chart shows me bid and ask fills at each price point, so that I can see where there's aggressive buying, where there's aggressive selling, where buyers are being trapped, where sellers are being trapped. And all of that really comes down to, and this is where a lot of traders get kind of lost in this order flow theory. If you don't have a full understanding of what's just traditionally happening between price and volume, adding these steps of order flow into your trading is only going to confuse the heck out of you. Because you're going to think that everywhere a buyer's trapped, that you should be trying to sell, or everywhere sellers appear trapped, you should be trying to buy. And that's the furthest thing from the truth. All right? You need to perform basic analysis. You need to identify areas of support and resistance. You have to pick and choose where you're going to enter the market first, and then utilize order flow to say, okay, the clue that's been left behind based on the order flow is now telling me, based on my trade plan, that I'm looking to enter the market. So let's kind of just get a little deeper into what you see here. I'll just go top to bottom, and then I'll go a little deeper into the footprint, because I know that that's where a lot of people are mostly interested. So up top here is my speed of tape. What does that mean? Off to the right here is my tape, my time in sales. What it's telling me is at what price point, how many orders are being filled, how quickly. And again, I've kind of condensed the screen a little bit. Normally there's a little more data, but it is telling me at what price point buyers and sellers are engaging the market. And this is telling me, based on a bar chart, how quickly or how aggressively those orders are being filled. Similarly here with these dials or gauges, they are basically telling me the same thing based on bid, ask, volume, ticks, things of that nature, how quickly the market is moving, how quickly orders are being placed. Because a lot of people think that it takes more buyers or sellers to move the market, and it doesn't. The market is a zero-sum game. There has to be a seller of a contract for there to be a buyer of a contract. So in saying that, the market moves not on an imbalance of buyers or sellers, it moves on aggression of buyers or sellers, right? When there's aggressive buying and selling, that's ultimately what moves the market, not necessarily an imbalance. At the end of the day, every day the market settles, there must be a buyer for a contract as there must be a seller for a contract. So off here to your right, and I'll just kind of jump over here very quickly. This is volume profile for the entire Globex session. This is delta volume profile for the session, right? So a little bit different. This is telling me kind of where the imbalance is. Sometimes there will be a very large imbalance, and some of those areas, either of buyers or sellers, can act as key levels of support and resistance. So you could see that we're just starting the Globex session. We're about an hour and 40 minutes into it. There's not much price action, and that's okay, right? Like, it's not very expected at 7 p.m. or 8 p.m. Eastern Standard Time. That is what it is. Off to the right here is the book map. All right, I've used this for quite a few years now. Very pleased with it. I like the way it displays. It gives me a little bit of a broader picture where the number, where the orders are resting in the market. The Motive Wave does supply the same thing here. So you can see this bar chart that runs along the side. It is telling me where the resting liquidity is sitting. But I've just become really fond of the book map. I like the way it looks. I like the way that it performs, especially when the market gets aggressive. I like that this adjusts a little more efficiently than the Motive Wave does. It is what it is, but you just gotta, it's pick and choose, it's preference. I use the book map for my clients. They have access to the book map for the markets we trade. So I figure, I'd like to use it myself, because if it's good enough for me, it's great for them. So it's not something that I've stepped away from, even though Motive Wave does provide, to some degree, the ability to see resting orders in the market. On the bottom here, this is going to tell you delta per candle. It's going to give you the actual volume, cumulative delta, percentages, things of that nature. Again, a little more advanced, not necessary for most people to be too worried about unless you've built a trade plan around it, okay? I'm not shooting this video so that you go out and spend all this money on a OrderFlow trading software, okay? That's not what this video is intended to do. It's just I've been asked what my OrderFlow looks like, so I'm sharing it with you. I've tailored it to me to display the way I want it to, based on my trade plan, so that I can make decisions for me. It's not necessary that it means it's right for every single trader. Again, I strongly, recommend that most people have a reference chart that shows the things that you believe are necessary to see, and then be trading on a naked chart, or a chart with necessarily nothing on it other than analysis that you have really hand applied to it. So I saved the footprints for last because that's what we're going to kind of dive into right now. Essentially what I'm looking for is I have to first identify key levels in the market. If I don't have key levels, the footprints essentially mean nothing. Okay, you can see continual trap buyers in an uptrend, and believe it or not, they're not trapped at all, right? They're actually just aggressively entering the market. Inversely, on the downside, you can see trap sellers, but they're really not trapped, because ultimately the market follows through and they get a good position, because at the end of the day, they're just showing aggression. So you need to be able to identify what's the difference between aggressive participants and participants that are just entering the market. And that's not easy to do, all right? It does take time. I recommend, before incorporating any of these forms of order flow, the book map is great because it just shows me intent of other traders very simply at certain price points. That I recommend for just about everybody. I don't think that I would consider trading without it at this point. When it comes to footprint charts, when it comes to delta, cumulative delta, and starting to try to understand all those key components, the tape, time and sales, the aggression of the tape, delta volume profile, all those things start to become additional edges you can apply into your trade plan after you've already proven yourself profitable, okay? You need to have a simplistic approach that you can explain to me literally in a matter of, an elevator ride up 2 or 3 floors and go, hey, I'm a trader and I trade this market and this is how I trade it, right? My name's Anthony Special. I trade crude oil. I look for trap buyers and sellers at key levels of support and resistance. Based on that print, I decide if I'm prepared to take a position in the market or not, period. Right? Now, there's all intricate components that go into implementing that trade plan, but that's my trade plan. Right? It shouldn't, your process that you employ in the market should be that simple. The complexity of it is within your execution, right? So I identified live this morning that to my traders, as we were analyzing the market, that I felt that there was a very key level here at 81.73 specifically. Okay, so 81.73 is a key level that if buyers are unsuccessful in overtaking this level, that there's a good chance that we could fall back. If we are successful in pushing through 81.73 specifically, $81.90 and $82, those round numbers are going to play a role as well. So as you can see, I'm hovering my mouse over 81.73. So let's look and see what's happening at 81.73. In this first attempt, you can see we have a large number, and you can see by the dark green, of net delta buyers here at the top of this order flow candle. You can see from 81.68 up that there's all buying intention here. Right? Now, I as market analyst and trader go, all right, I see this level as resistance. Other market participants may see this level as, oh, we're going to push the overnight high. I didn't see it that way. And it's not to say that I couldn't have been wrong. I very well certainly could have been wrong. The market did pull back a little bit. We regained this area. You can see these top four price points here from 81.69 to 81.72. We have the bulk of the buying stuck in the wick of this candle. Right? This is the body of the candle. This is the wick of the candle. So these buyers are stuck. Right? Again, we come to the next one. We got some stuck buyers, but we're still really just working off of the prior candle, unsuccessful in pushing through. Got a strong buy and balance up here. That gets filled on this last attempt to get through this level. And what does basically the entire wick consist of? Consists of trapped buyers. Okay. Now, I wouldn't have known to look at this price point unless I did my analysis first. So again, the reason I say this is because I don't want you to watch this video and think that footprint charts are going to be the answer to your problem. They're not. They will only complicate your approach to the market. If you cannot identify clearly support and resistance, adding footprint charts are just going to confuse the heck out of you. Everything you see on this screen will just confuse the heck out of you. You must be able and you must be fluid and consistent at identifying key areas of support and resistance. Because again, in an uptrend, you will see a lot of this. They're not trapped, they're just aggressively getting long. They're willing to cross the bid-ask spread, enter at the market to get long. The market impulses, it corrects, it impulses, it corrects, and it will continue higher in an uptrend. Once you have reached key resistance, which this was a level I determined before the order flow ever printed, that at 81.73 specifically, if we get stuck there, we're not going to take the overnight high, we're not going to take $82. And it was able to be identified by looking at these candles collectively, right? This is a 5-minute candle. Every candle represents 5 minutes. So we have the approach. Here's 5, 10, 15, 20, 25, 30, 35 minutes before the market finally gave it up and sold off aggressively. You have to be patient. You have to understand that what's happening here is all these buyers are being absorbed by passive sellers. They're willing to take the other side of the order, right? And the balance of them are all getting stuck here. Why? Because people who were looking very carefully, very specifically at the market recognized that this was a key level of resistance. Right? So had I been trading at this time, this was a little bit after I was done. I had to leave the office this morning, but you can ask any one of my traders. I identified 81.73 specifically. And at 81.73 is where this 35-minute ordeal began. And you have to be patient. You have to go, all right, I know that I'm looking for, I have very strong buying at the top of this candle. I have clear trapped buyers at the top of this candle. I have buyers here within this candle, right? I still have buyers down here. Right here is kind of like the climax of the buyers giving it all they had. Notice the candle closed here, and who was trapped? All these net buyers, right? All these net buyers were trapped. 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 And guess what? When their order got filled, right, it only accelerated the move lower. When their stop orders got filled, look what happened. The market pushed much, much lower. Now, inversely, when you look at footprint charts, you would go, Anthony, but look at all the trap sellers right here. Okay, so all these trap sellers were what? They were aggressive. The market pulls back, and then the market continues lower. So you can't just randomly go throughout the market and go, hey, I see some trap sellers here that could be potentially trapped, so I'm just going to get long. Doesn't work that way. You have to identify key levels in the market before you can start looking for clues inside the order flow. Right? Because if you just do this randomly, you're going to have a very, very unpleasant experience. Trust me. Right? Now, if the market is in a downtrend and I can identify an area where there's trap buyers, right? Well, then I may be able to partake in the downtrend. I may be able to find a new entry point if I didn't catch the top at my resistance zone, okay? But if you're sitting here going, but you know, there were trapped sellers here. How come the market didn't reverse? It doesn't work that way. This is something that I would recommend if you want to get into footprint charts, if you want to get into volume delta, if you want to get into volume profile, if you want to start adding those things, and I'm not against it, believe me, I find it to be extraordinarily insightful. You have to dedicate 3, 4, 5 hours every day for a period of 6 months, and start seeing how these footprint charts, the delta volume, the order flow components will integrate into what you're already doing. It's not about relying on the footprint or relying on your analysis. When it comes to pairing those two components together, you now have the opportunity to say, I believe the market should experience resistance or support here. Are the market participants, or is the market providing me with a clue that could confirm my thought process, right? And sometimes it will, and sometimes it won't. Plenty of times it won't. You could see that it fluctuates throughout the entire day, you know, and then there's periods where the market goes sideways, right? And then the market's going to take a retracement. Got super strong buying here at 1:50 in the afternoon. You got trap buyers right here with a sell side imbalance. You have more trap buyers here. You have more trap buyers here, and guess what? The market then sells off. Well, how did we know it was going to sell off here? Well, we had to look left on a traditional chart and go, is there a chance that we could experience resistance here? And if there's a chance we could experience resistance there, and you believe that that resistance could play a role in the market pushing further lower from this point, that is when you would start looking at this and going, okay, I got super strong buying here. I got a sell side imbalance here with trap buyers. I got more trap buyers here. I got a big push here, buyers. I got a massive push here, buyers. And guess what? There was no ability to push higher, right? I mean, you got a delta here of 267 net buyers. This should be pushing the highs, and it didn't. So this, to me, stands out as, all right, this is resistance. This is the buyer's last attempt. Right? And then guess what? The market crapped the bed. Right? So we started to find some support. So integrating order flow components like you see on this screen. The footprint, the time in sales, the volume profile, the delta volume profile, the speed of the tape, the gauges, the delta and the volume on the bottom, and all the components that go along with it. The book map on the right side, is it all insightful? Absolutely. But if you haven't hammered out your trade plan yet, you cannot just look at order flow randomly and expect to be successful. Because you won't be. I promise, you won't be. Right? Order flow will help leave you clues at specific points in the market that you must first identify. If you can't first identify these specific potential support and resistance areas in whatever market you're trading, it could be the NASDAQ, the S&P, gold, crude oil, whatever. I mean, those are the markets we trade, but it could be anything that has structured volume. Really, any futures market. You need to then integrate, say, all right, this is my trade plan. My trade plan works over time. I'm a net profitable trader because I understand what I'm doing. I'm a disciplined, consistent trader. I have an approach to the market that I do not defy. I want to now see if I can increase my odds by finding clues that have been left behind within the order flow. And until you've reached that point in your trading career, adding any or all of this will literally confuse the heck out of you. And I don't want to see you do that. Right? My goal was not for you to watch this video and then go out and buy the book map, buy MotiveWave or any other of the other, order flow platforms and start adding all these things and then going in 2 weeks from now, this didn't help me. It's not going to help you. Okay? If you cannot identify key areas in the market first, potential turning points, basic support and resistance, adding this or integrating this, it will not help you. It will only hurt you. So, and then once you feel like, hey, I've built a consistent trade plan, I understand, what the market's doing, when, where, and why. I want to now look for clues that could potentially increase my odds of success. When you're at that point, that's when you start to integrate this type of order flow. It's not easy. From that point forward, I would tell you, you would be continuing to employ your trade plan that works, and you would be watching and analyzing the order flow with each and every trade you place, looking for clues or consistencies that occur when your traditional trade plan works out, journaling all of those things for a period of 6 months, 6 to 12 months, figure a year, and then going, okay, when I place a trade based on my trade plan, and the order flow exhibits XYZ, on a percentage basis, my trades work more successfully. Okay? When you get to that point, then and only then do you say, all right, now I'm ready to make decisions based on clues left behind within the order flow before I start diving, deferring from my already profitable trade plan. So it will be there will be a in-depth process that will take you to get there, right? Like, it took me time. This was not like, oh, just fire this thing up and figure it out. No, it took a long time. Like, it really took a long time, because I made the same mistake. I started believing, oh, well, there's an imbalance of buyers here. The market's going to turn. No, like, I have to look back at my chart first and go, all right, these are the areas I expect resistance. These are the areas I expect support. If the market gets to those areas, then does the order flow provide a clue that could lead me to making a decision? And that clue could be resting liquidity. It could be a cumulative volume delta and divergence. It could be, delta footprint, or it could be a delta volume profile. It could be traditional volume profile. It could be an imbalance of buyers or sellers. It could be a number of things before I'm ready to make a decision, right? But I want to feel like I've swept through my screens. I've looked at all the potential hazards that could be there, and then I feel like, hey, I've reached a point where I believe the market could do this based on ABC through XYZ. And then what I do when I place a trade, I go back and I screenshot what the order flow looked like, what the liquidity looked like, what the price action looked like, what the cumulative delta looked like. And then I can go back and really in-depth analyze, hey, did I make the right choice, or was there something that I potentially missed, or something I can learn from that I could do better the next time? So before you dive into this, because I know there's a lot of people out there that'll see this and go, oh, this is going to fix my problems. No, it's not. It's only going to make your problems worse, right? So hammer out the trade plan, prove yourself profitable on a paper simulated account first, right? Next step, prove yourself profitable with a small account over a period of time. And then if you decide, hey, I'm ready to really take that next deep dive into professional level tools, like this is not TradingView, these are professional level grade tools, using real live data flow, not, the retail stuff, if you would. Then I'm going to sit there and go, all right, now I'm going to spend the next 6 to 12 months integrating these tools that work for me. These are the tools that work for me. They may not be the right ones for you. And then decide how they affect your decision-making process, and if they put the odds in your favor. If you find out that you're second-guessing yourself and you're not taking trades that you would have before, and so on and so forth, and it's not hurting you, not helping you, then there's no need to go down this avenue. But if you feel like this could be of service to you through hammering it out over 6 to 12 months, taking deep in-depth notes, saying, all right, was I able to identify these certain things at certain levels that gave me the confidence to take a trade, or led me to believe the trade may or may not work, then perhaps you can consider starting to implement this. So I shot this video, again, by request. Folks that have asked me, Anthony, what kind of order flow do you specifically look at? It's raw price action, it's raw volume, it's volume profile, it's delta volume, it's cumulative delta, it's the time in sales, volume profile here that you see in front of you, delta volume profile, the speed of the tape, the orders that are coming across, how quickly, and then I'm looking for imbalances or essentially trap buyers and sellers. And I hate to say that when somebody else is getting squeezed, I'm making money. But at these key levels, like I showed you a little bit earlier, and we can go back to it, you can see just how much buying interest there was here, right, at approaching and above 81.73. Now, I identified 81.73 before the order flow ever got there. So that's the important part. If you can't identify key levels first, then integrating this is just going to do you more harm than good. So for most of you, still focus on hammering out that trade plan. From an educational standpoint, even from a personal standpoint, I am a huge believer in taking a paper or simulated style account, adjusting that account to whatever you plan to deposit in your trading account, applying your trade plan over a period of time, and doubling that account before ever trading live money. Okay? When you do go to trade live money, you better be prepared for the mental and emotional components that come along with it, because it does get more complicated the larger size that you begin to trade. All right? And then, and only then, after you've gone through all those steps and you've proven yourself profitable again in a live account, then and only then will you take the next step to in-depth order flow. You'll continue to trade that live account along your trade plan, and then you'll start note-taking what the order flow looked like on the trades that worked out and on the trades that didn't work out, and is there a pattern that you can identify that will help put the odds in your favor. Until then, guys, adding this stuff is not going to fix your problems, okay? Your problems, more often than not, and this is not disrespectful, starts and ends within the trader themselves, right? There's lots of tools out there. Use them, employ them, get your mind right, because this is very different from anything else you've ever done in your lifetime. I I hope this was informational. I hope you learned something. If you did, please feel free to leave a like or a comment. I'll see you in the next video. God bless, and as always, thank you.